Imagine a bustling market in the heart of Nigeria, where traders from every region gather to sell their goods. The atmosphere is complex and one that encourages multiple taxation at federal, states, and local levels, thereby proving a major burden on those willing to comply. One day, a town crier announces a sweeping reform that promises to change the rules of trade for everyone. This is perhaps the essence of Tinubu's tax reform bill, a bold attempt to reimagine how Nigeria collects and distributes taxes with far-reaching effects for its citizens. But what exactly is in the mind of the government? What's the vision all about? Now just think of this: low tax compliance, complex tax structure, over-reliance on oil revenues, a low tax to GDP ratio, inefficient tax administration, regional disparities, lack of awareness, and more. Now the big question remains: what nation can cope with such anomalies? And so the government sees the reform as a chance to clean up the messy tax rolls of the Nigerian marketplace. Now, for many years, traders have continued to complain about too many taxes, confusing rules, and unfair systems that punished those who played by the book. Tinubu's administration wants to fix this by harmonizing taxes and simplifying processes so that businesses thrive and the market grows, meaning a stronger market for all. For instance, under the current VAT system, taxes go to states where company headquarters are located and not where goods are sold. But then, should this necessarily be the case? Let's hear your opinion in the comment section below. The Tinubu tax reform proposes allocating funds based on where transactions happen, which the government argues will create fairness and boost activity in all corners of the market. Additionally, measures like exempting low-income earners from taxes and lowering corporate income taxes aim to provide relief to vulnerable groups and stimulate business activity. By modernizing revenue collection, the government hopes to raise the tax to GDP ratio without imposing new taxes on the Nigerian people. But then, let's talk about fears that this might be a market policy tilted against the North. The reality that has met with Tinubu's tax reform bill is that not everyone is convinced, and here's why. Again, imagine a smaller group of northern traders in the market who feel overshadowed by their wealthier southern counterparts. Leaders like the Northern Elders Forum warn that the new rules could make it even harder for these traders to compete. They argue that since northern states are less industrialized, they may receive less money under the proposed VAT system, which could hurt their ability to develop and provide basic services. Adding to their frustration is how the reforms were crafted. Many critics have said that the northern traders weren't properly consulted, making them feel excluded from decisions that affect their livelihoods. As the debates of the Tinubu tax reform continue to rage, some groups have also stepped forward to bridge the divide. The supporters of Tinubu's tax reform bill, including some northern economic groups, have countered that the reforms will ultimately promote national development by boosting transparency and harmonizing tax processes. They emphasize that no state will be worse off in the short term due to mechanisms like equalization transfers. The Northern Economic Development Forum has said it is essential to see the reform as an opportunity and not a threat. They highlight provisions that exempt low-income earners from taxes and lower corporate rates, which could benefit smaller traders across the country, including those located in the north under the proposed tax reform bill. They further argue that streamlining taxes will help all regions in the long run. Meanwhile, skeptics have continued to counter that promises on paper often fail in practice. And what if the promised equalization funds don't fully address disparities? The fear is that the richer states will still walk away with the largest share of the pie. In addition, skeptics also warn of potential socio-economic disparities, particularly if implementation lacks sensitivity to regional inequalities. This highlights the importance of ensuring that all regions benefit from the economic gains promised by the reforms. As the Tinubu tax reform bill continues to buzz with public opinion, it is clear that the stakes remain high. The reform could modernize Nigeria's tax system and unlock potentials across regions, but it must be carefully implemented to avoid widening the gap between the rich and poor states. And just like in every market, balance and fairness are key for everyone to succeed. As the story of Tinubu's tax reform bill unfolds, the final chapters will depend on how well policymakers listen to all voices, ensuring that Nigeria's market and its diverse people from all regions thrive together. Thanks for watching, and if this is your first time on this channel, please make sure to hit on the subscribe and notification button for more of our videos on Nigerian politics and the Nigerian economy.